Bitcoin represents a paradigm shift. It's the digital transformation of money, property, and energy. And paradigm shifts are so profound that you're staring at them and you don't realize they took place because your worldview is constructed based upon a bunch of assumptions that you've always taken for granted. You could be a brilliant person, but you won't embrace the paradigm shift while you're alive in the absence of a crisis.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of MicroStrategy, Michael Saylor, talking about the issues in the crypto industry today. Saylor feels that Bitcoin is the best option for anyone who lives in a nation where they cannot trust the bank or local currency. The problem with currency in the long run is that even the strongest coin will lose 99.9% of its value over the next 100 years. Money all over the world is losing up to 40% of its value now, and the only reason there is no panic in the US is because the CPI is being manipulated to create the lowest possible inflation number. According to the CEO of MicroStrategy, Bitcoin has been negatively impacted by vulnerabilities and other assets in a market that is largely unregulated. Saylor has been under fire many times in the past few months over falling prices, volatility, and uncertainty. Let's get right into the interview with Michael Saylor, who will give us his take on the current state of the Bitcoin market. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
When you think of it as digital gold, then it should replace gold. Gold's worth $10 trillion, and that takes Bitcoin to 500,000. But when you think of it as digital property, like replacing buildings and land and other long storeholds of wealth, then, you're up by a factor of 20 or 30 from there. I mean, it should not be, it's much better than digital gold because I can move Bitcoin at the speed of light and I can program it to 1 million transactions an hour on an iPhone or a website. You can't do that with gold. So it's got more utility than gold, which means it's probably worth 20 or 30 trillion if it just replaces the gold. But instead of buying the Fontainebleau Hotel, which is a nice hotel, worth whatever billions in Miami Beach, instead of buying that, instead of buying the equivalent amount of Bitcoin, if you bought the Bitcoin, you can move that to any city in the world every hour of the day, compose it, decompose it, recompose it, dematerialize it. And, when there's a nasty tax on it, you can just move yourself to a different jurisdiction where there's a better tax treatment. And if you think of it like that, then it's a multi-$100 trillion asset class. So at 10 trillion, it's 500,000. At 100 trillion, it's 5 million. So I think, we're marching toward $10 trillion, which is, $10 million a coin, which is why Bitcoin enthusiasts see it's just a very great long-term store of value, and it's a great investment idea. Financial assets were having the best year ever. People had great years. I mean, a lot of these hedge fund managers, they had the best year of their life in 2020 or 2021.
Yeah.
And Main Street assets were having the worst year in 30 years. And I had a company with $500 million in cash that was dead money. It was idle. It was generating 0% interest. The Federal Reserve said, we're not going to raise interest rates for 4 years. The company's stock was in the tank. At one point, in essence, when we were going through this, our company was valued at $60 a share in cash and $60 a share in the software business. And that was like 1 times revenue.
According to Saylor, raising interest rates is one strategy, but the real inflation rate, which they won't disclose, is 2 to 3 times higher. The money printing is just one of several variables that are contributing to the increase and the devaluation of currencies.
I just give the $500 million back to the shareholders in a dividend or a buyback. Now, I knew that wasn't going to save the company because I'd been buying back the stock for the last 5 years. I bought $300 million worth of stock back or something. And the only thing that would happen would be the stock would go from $120 a share to $60 a share. And then all the stock options, the employees would be underwater. Then all the employees would get headhunted away by Amazon and Google and Facebook, and then we wouldn't be able to compete with Microsoft. And every company on earth is their customer. They're more powerful than all but about a handful of countries on this earth. And they can do whatever they want, wrap it into their product, give it away for free if they want. So the challenge of giving up the capital was, first we'd lose our financial capital, and then we'd lose our human capital, and then we'd have no reason to exist, and the company was going to zero. So the second strategy is hold the cash, but the cash is, cash trash. Ray Dalio says that is generating 0% interest. And the money supply expanded by 20% a year for the past 2 years. You can see it in U.S. single-family homes, which shot up 40% in price. And so if the money's being devalued 20% a year and you're generating 0% interest, you got a negative real yield of minus 20%. And I did the math in my head, and I concluded that pretty much the $500 million in purchasing power would be cut into $250 million of purchasing power in 36 to 48 months. And so in that situation, we decided we should do something transformational. So I kind of knew, I tried everything for a decade. I knew it wasn't going to work from first observations. So I thought, well, what if I could find a digital gold, which was better gold than gold, something that is better than gold, but also a big tech monopoly? And here are my three criteria. I want it to be a better gold than gold. I want it to be a big tech monopoly, and I want no one else to appreciate it. I want it to be underappreciated. And that's what Bitcoin was in the second quarter of 2020. No one thought it was an institutional asset. Even though Amazon stock had doubled in the second quarter, Bitcoin was trading about the same as it had been trading in 2018 or 2019. It got up to 10,000, it had smashed down to 4,000, it was back at 10,000. So I looked at it and I said, well, based on all the information, you would think that a digital property network or a global digital money network is more valuable, knowing that people are losing confidence in currencies, losing confidence in central banks, losing confidence in governments, and this is a non-sovereign, open, decentralized system. So it struck me that the fundamentals were good,
yeah, you would think
but it wasn't appreciated.
Yeah.
So we're there, and we have to take a risk. We literally have to, or we got to sell the company, right? We're done one way or the other. And I said, well, this is a reasonable risk because it looks like the Facebook of money or the Google of money in the year 2010 or 2011. While 98% of the world doesn't understand it, it's a bit too complicated, they're afraid of it. But just because you don't understand it doesn't mean it isn't true. It just means, and I had the experience of riding the mobile wave.
Yep.
And I'm the guy in 2011 that bought Amazon, Apple, Facebook, and Google stock, and they all worked out well. And I thought, the year's 2020, we're at the end of the mobile wave. So get off the mobile wave, get on the crypto wave. And think that through, so that kind of made the decision straightforward. It wasn't without risk, but the alternative was pretty much throw in the towel. And so we got into this business at that time, and of course, the last 2 years have been, I think, fairly good ones in terms of commercialization, institutionalization of digital assets.
Saylor says even educated people that have been in the digital asset industry for over a decade don't understand that cryptocurrency is digital energy. They have such a strong bias towards their point of view that they're unwilling to accept new ideas, especially when it comes to their financial portfolio. He says that most people don't have an idea of what money or property is, and if you call crypto digital property of money, they wouldn't be able to understand. Saylor adds that the best grounding to understand what crypto should be is aeronautical engineering, because they must master computer science, mechanical engineering, and much more, which computer scientists find inconvenient. What do you guys think about Michael Saylor's opinion on where digital and fiat money is currently heading in today's financial industry? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.